Welcome back. I'm Pratap here. Today is the 27th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is highly expensive. But we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. So at our channel, click on the tab Posts. You get access to this post. Some of you might be seeing the tab Community in place of Posts. So click on the Community tab. Still you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. In this playlist I added all the training lessons. You just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions provided at our Telegram channel. I provided the link to our Telegram channel in this video description. Go to the video description, join at our Telegram channel. At the Telegram channel, top of the window, you can find pinned messages. Go to the pinned messages. One of the pinned messages are about training instructions. Learn this course according to those training instructions. Then definitely you will become a very good independent trader in the coming months. Please make use of this opportunity. Okay, now let's get into the performance evaluation of the high liquidity zones. Yesterday, end of the day, our software identified 1, 2, 3, 4, 5, 6, 7, 8 high liquidity zones from daily and 75 minutes time frame. And we got two successful trades. Strictly speaking, we got 3 successful trades, but third one I did not consider. Why I will explain. The first one is MGL. If you would have looked into our yesterday's HLQ zone analysis video, you might have seen MGL fine-tuned zone. Whatever I fine-tuned yesterday, the same thing, we got the trade. But only mistake I did is yesterday, due to lack of time, because I recorded very late in the night. So I did not explain how I fine-tuned all these different time frames. I just shown you from daily time frame. Actually, yesterday we have seen a daily. Our software identified stocks near the daily zone. In this view, I have shown yesterday. And this fine-tuned area, we got the first fine-tuned area. Today we got the trade. Gave very good profit. But how yesterday it displayed this? Yesterday it displayed as a stocks near the daily demand zone. Inside this daily, there is a 75 minutes high liquidity zone. Day before yesterday displayed as stocks near daily demand zone. But yesterday, our software displayed as stocks near 75 minutes high liquidity demand zone. Inside this daily high liquidity zone, we have a 75 minutes high liquidity zone. Let's go to the 75 minutes time frame. See, our software identified this as a rally, 1, 2 base candles and a rally. This is actually based on imbalance our software identified. You may say the lagout is not great. Yes, but software identified maybe the imbalance started from here. And that itself identified high liquidity zone. And later on you see it displayed as a drop, base and with hidden body rally candle, LOTL zone. And when I fine-tuned this zone, I did not fine-tune like this. This is what software identified, rally, 2 base candles and rally. But in my analysis, because I am not taking help from the software, I always do analysis on my own completely. So what I did is, I identified the zone like this. Drop, base, rally. Drop, base, rally. And then I have drawn within this area fine-tune. Even if you drop base rally, if you identify like this, or rally 2 base candles rally, if you identify, the lower time frame analysis still remains same. See, this is the picture I have shown you yesterday. Let me go to the daily time frame. This is what I shown you yesterday. Yesterday I said rally base to base candles rally, and price just touched this daily demand zone. They did not reach fine-tuned area. But today they reached the fine-tuned area, gave a trade and reached up to the 15 minutes target. And before we look into that, the 75-minute zone, what I fine-tuned yesterday is like this. Drop base rally. After that, I fine-tuned within the 75 minutes. It's a very clear drop base rally. And again drop base rally. Two order flows are here within the 75 minutes area. Now again I went to the 5 minutes. Within the 5 minutes, this is what I have drawn. Drop 3 base candles with the hidden body rally candle. And also here drop 4 base candles and rally. And today we got the trade from this area. Just entered. 9:15, 5 minutes candle, but this is not 9:15 1 minute candle trade. This is 9:17 or 9:18 candle. Let me go to the 1 minute time frame. 9:17 candle we got the trade, and after that 9:26 candle it reached the target. In 10 minutes trade is completed. This is the 15 minutes target. Drop base drop, and this target is reached. But before we look into this, how software identified this zone? Let me go to 75. Software did not identify this as a drop base rally. This is LOTL zone actually, according to the software. Software always identifies the nearest to the current closing price, that zone. See here, this proximal line is here. The proximal line of this software identified zone is before the LOTL zone. That's why it identified this. And moreover, it is a high liquidity zone. So what I do, just only change I am doing, I am just deleting the 75 minutes zone I have drawn yesterday. Still I am keeping all the order flows. See, this is the 15 minutes order flow. This is another 15 minutes inside 5 minutes and 5 minutes. Now let me draw according to the software identified, because this is what the report you got with the help of the software. Okay, this is the 75 minutes demand zone according to the software. Drop base rally, this is LOTL zone, same 75. Now let me go to the 15 minutes. Still the analysis is same. See, inside this 75, we have a drop base rally 15 minutes, again drop base rally 15 minutes. Before that, there are no zones here. All are medium size candles. So that's why our analysis still holds good. This is the area. And what about these order flows? These are the remaining order flows inside the daily zone. Now our focus is only on the 75 because software identified stocks near 75. Of course, we can also make use of these order flows, but as per yesterday's report, I am concentrating only on this. See, this is the zone identified by our software, 75 minutes zone. Inside 75, we have drawn yesterday these zones. And today exactly whatever we have drawn yesterday, from there it gave a trade and then reached the target. Your entire trade is completed in just 10 minutes. And in 10 minutes, MGL has given a profit 10,720 rupees profit, which is 8.1% ROI as per one futures margin cost. But remember, here today is actually futures expiry date. Futures expiry date, HLQ zones always prefer the next month futures. Next month means April futures. Why not March futures? March futures on the futures expiry day, the margin costs are very high. Almost double. And moreover, today all the people will be roll over to the April futures. Those who are holding for short term, swing trading or even short term, if that they did not reach the targets, they will roll over to the April month. And April month futures is almost 50% lower than the today's future. If not 50, maybe 40% lower. So that way, always on the futures expiry day, never go to the current month future on the expiry day. And also it is quite dangerous also, planning intraday related trades. In case any of the future is not executed or you are not able to exit, a lot of fine you have to pay. So many difficulties will be there. To avoid all these things, always we have to plan. Actually, my advice to everyone, the last week of the futures expiry date, don't go to the current month. Go to the next month futures. The week when, that is Monday onwards, don't go to current month futures. Always use next month futures. Okay. So this is about MGL. MGL we got 8.1% ROA. And the next one, another one we got, and Tata Communications. This is also a 75 minutes high liquidity zone identified by our software. How our software identified this zone? As a drop, one base candle, rally candle. Failed ERC considered as a drop. Because it is a drop, the lower wick you have to draw the distal line. Of course, the lower wick of leg in, base and leg out, whichever is lower, that you take distal. Here this failed ERC candle, lower is the leg in. So this is the one, our distal line, base and rally. This is how we have drawn this 75 minutes zone. And inside the 75 we have 15 minutes zone. See here we have a rally candle. You have 1, 2, 3, 4, 5 base candles and a rally candle. Rally, base, rally. And within this 15 minutes, not only that, there is one more 15 at the distal line. See, rally, base, rally. This is the origin. Lower time frame origin. 15 minutes origin to 75 minutes high liquidity zone. From this origin, it picked up the orders and this entire move started. So this is the origin also we have drawn. So two order flows we have drawn. This is the first one and this is the second one. Now within the 15 minutes, first look into the bottom one. The origin of this entire zone. See, we have a rally, two base candles, rally and follow through candles. And then picked up the orders from this origin. Then the entire 75 minute zone is created. So this 5 minutes, fine-tuned 5 minute zone is also origin to the 75 minute zone. Because this is a fine-tuned zone. That means 5 minute zone is the origin, but that is inside a 15 minutes origin. Obviously, this is having even more strong order flow. You know, zone confluence will be having more strong. Suppose 5 minute zone order flow is strong, let us assume. If the 5 minute zone is there inside 15, its order flow could be even much stronger. If both together inside the 75, their order flows are even much stronger. If both the three together inside daily, their order flows are even much stronger. That's why always we fine tune the zone and take the trades. So this 5 minutes origin is the fine tuned 5 minutes origin. Rather than saying 5 minutes origin, we can say fine tuned 5 minutes origin. The moment you use the word fine tuned, we should understand its order flow will be stronger because it is inside its higher time frame zone. Okay, anyway, this is the one, and before that we have one more zone. See here, the 15 minute zone picked up the orders from this drop base rally. And from here it picked up the orders. See the digital line, the 15-minute zone. Picked up the orders from this drop base rally. So this is the origin. You may ask a question, can't we draw a zone here? See, all these are all base candles. This is the rally candle. You have 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's why this is the area we can't plan the trade. You may ask a question, can we compromise? This is the leg-in. Okay, we compromise. It is a base candle, but we consider here prices moved in a narrow range. Can we draw a zone? You can draw a zone if it is the 15 minutes or higher time frames. 5 minutes you can draw, but it is quite dangerous. That is what yesterday HLQ analysis video, clearly I mentioned this point. What is that I told you yesterday? You compromise at 15 minutes level or 75 minutes level because you are fine tuning to the 5 minutes. You have a good 5 minute structure. Even if you compromise at 15 minutes, it is okay. But don't compromise at the 5 minutes level, it is quite dangerous. If you have any doubt, maybe can I consider as a leg-in? These are all the base rally. Go to 3 minutes time frame and see, get the confirmation. Maybe the structure is good. Then in such kind of situation, you can plan. But see, 1, 2, 3, 4, 5, 6, 7. Now rally candle. So clearly, a lot of consolidation took place here. Easily such kind of zones will be violated. But here you see, you have a drop base rally. This is the area it picked up and entire 15 minutes formation took place. See today what happened? See, prices entered into that area and we got the trade. Nicely it moved. Even if you would have drawn at a 3 minutes level, of course 3 minutes also the same. I mean, this is a morning 9:15 5 minutes candle. You might be having a doubt. Maybe is it a morning 9:15 1 minute candle? We can't take the trade. No. It is morning 9 o'clock 18 minutes candle. Let's go to the 1 minute. You will get clarity. See, this is the 9:15 candle. This is 9:16. Sorry, this is 9:17 candle, not 9:18. 9:17 candle, you got the trade. I'm sure today you might have taken a trade either MGL or Tata Communication. Not both, because both are executed at 9:17. Maybe if you placed orders in both these stocks, that is a different story. Suppose you have a lot of money, you are investing your money in different stocks. Especially futures, I'm talking, futures point of view. You are buying maybe 2 futures in Tata Communication, you brought another 2 futures MGL. You might have placed your orders in both this. But otherwise, we are a small investor. Only one future you are buying. So either one, either Tata Communication or MGL, one of these you might have invested. And after that, it gave a big profit. Actually here, there is a 15-minute zone here. See this? Lot of consolidation. And already that is gone in morning 9:15 candle itself. So here you can't draw the zone, 15-minute zone. So that's why the best option is use a trailing 1 minute trailing stop. Because here I considered 1 minute trailing stop because this is just pierced 15 minutes zone and structure is also not good here and order flow is gone in this candle. See, in this candle, the order flow is gone. The 1 minute trailing stop, you got a profit. You see here you have a drop base rally. And this is the one again picked up the orders from this zone and again moved. Again you see here rally, base rally, exactly from here. Just touched the digital line maybe. Or maybe a few, or 1 or 2 paisa before that. Almost. And then again it picked up, moved up, moved up, moved up. And here you see failed ERC as a leg-in, base, medium size candle, part of the base and rally, big candle. And this is the one first 1 minute failed here. maybe you might have exited here, this 1 minute zone. That way you would have booked the profit. Till the 1 minute trailing stop loss, if you applied this approach, probably you would have got this much. This is the profit. Let me draw. One minute trailing. That's target. Our target based on this is the profit you would have captured maximum. Or if you want to, because if you are convinced the 15 minutes, even though it is pierced, still you want to consider on this, probably here you might have booked your profit. Yes, so many candles, 5 minutes, 1, 2, 3, 4, 5, 6, 7. This zone will be violated easily because we know, because structure, this is a lot of consolidation took place here. Go to 5 minutes. See, in this candle, in the morning candle, this is gone. After that, prices came and again started moving up, moving up, moving up. This is easily violated. And here, trailing stop has been stopped. So that is the reason why target calculation I made up to here. Maybe after that further moved, it moved out. But see here, lot of time it struck up within this area only. Till 1 minute trailing stop, it has given 7,980 rupees profit, and which is a 10% ROA, 10.1% ROA as per one futures margin cost. If you look into this April futures, its margin cost is I think around 80,000. If you are investing, if you are having 2 lakhs fund, you would have purchased 2 lots. Close to 16,000 rupees profit you would have got, close to. 20% total, 10 plus 10. Of course, each 10% only, it's not 20%. For 2 lakhs investment also it is 10%. But profit would have been increased. Okay, these are the 2 successful. Third one also you got, but I didn't consider. Why I didn't consider, let me explain. That is Ponavala. This is also a 75 minutes high liquidity zone. Our software identified this zone as a drop, 3 base candles and a rally candle. This is the 75 minute zone. This 75 minute zone is fine tuned with 15 minutes. This is the 75 minute zone, fine tuned with 15 minutes. Look into the 15 minutes time frame. In the 15 minutes, you have a rally candle, 1, 2, 3 base candles and a rally candle. Maybe if anybody convinced this is a failed ERC, I will consider here prices moved in a narrow range. Maybe you could have also drawn a zone like this, 15 minute zone. But for me, okay, I am convinced this is rally, all 3 are base candles. Anyway, this is the 15 minute zone. And moreover, this is the pro gap area here. Now go to the 5 minutes. In the 5 minutes time frame, here we have a drop candle, 3 base candles and a rally candle. I consider this as a drop. Drop, 3 base candles. This is the pro gap. And today prices entered into this zone. When? 13:20. Afternoon, 13:20, it reached. After that, it achieved 1:3 RR. See, it reached the target 1:3 RR. The only reason why I didn't consider this trade is Go to 15 minutes target. Here, maybe this is looking like a base candle for me. Maybe some of you may consider this as a leg candle, medium size leg candle, because the body is definitely not less than 50%. But definitely body may not be more than 75 also here. Maybe body might be close to 70% or something. That's why I have a dilemma here. That's why what I did, I went to 5 minutes time frame. In the 5 minutes, you see, you have a drop base. This is clearly a base candle. No doubt. You have 50% body and 50% wick. Or close to 50%, or maybe 51, 52. That is okay. So definitely this is a base candle. If that is the case, probably my target should be like this. And if this is the target, I will not be getting 1:3 RR. How much I get? I get only 1:7 RR. Okay, if I want to go for a trade, what I have to do? I have to fine tune this zone entry. I have to fine tune the entry to get 1:3 RR. So let me adjust. See, now I am maybe a little above. Yeah. So here I have to take my entry. But is prices reached to that level? Did they reach my fine-tuned entry? No. Our zone, whichever the zone, the fine-tuned 5-minute zone, it just touched the zone and then started moving up. So that means you might have missed your trade by considering up to this, by considering the trade up to this. It's all happened because my 15 minutes target is not clear here. Or if you are convinced this is your 15 minutes target, you might have drawn your zone like this. Even then, you got 3.24 and you can fine tuning, you can take a little early. Okay. This could have been your entry. Even then you might have missed your trade. See, price did not enter into the, you would have, if you are convinced this is the 15 minutes target. And those people who did not consider, and probably those who are keeping this is the target, 15 minutes target, rally, base, drop, follow through candles. If you are convinced, your next 15 minutes target here. Or this is the one. But here this is a failed ERC candle. And this failed ERC candle is not a, because the complete body, the body should come out of the zone. It should not be inside the zone. That's why this is not a convincing leg out. Or somewhere here, if you want to keep any 5-minute zone, check any 5-minute zone. Here you have a 5-minute zone. Rather than considering this, if you consider this rally base a drop, then probably till here you got more than 1:3 RR till this area, and price also reached almost the closing hour of the market, last 2 minutes before the closing. It would have reached our target. That way you would have got profit. But all those are almost hypothetical scenarios, because nobody will think this will be violated and then it will reach here. That is hypothetical. We have to think in a more practical way before planning the trade. So that's why this trade we would have been missed. But zone point of view, actually it successfully worked. But trade point of view, it did not work. See, here we are seeing a performance evaluation We are seeing trade point of view and zone point of view. Both are we are balancing and then calculating all our statistics. One side it is favor, that is not enough. Your trade point of view also, it should be favorable. Then only we consider the zone is working, because it should be practical for the human's point of view. Then only we consider the statistics as successful trades. So this is the reason why I did not consider, for our statistics point of view, I did not register. Maybe zone worked, our high liquidity zones worked, we are very happy for that. But practically, considering this trade, this is not really suitable. Because it is not suitable, even though the zone performed, we are not putting in our calculations, performance calculations. It should be more practical. The performance should be practical, more practical, not theoretical. That's why it is more practical. Recently we see we made a lot of changes. Morning 9:15 candle, no trades we are allowing. After 3 o'clock, previously we considered, even 3:20 also I considered previously. But when I am updating because every time, when more and more historic data we get, more and more better decisions we take. Why this Excel sheet? This is always helping us to do a better trading decisions. In the historical data, any wrong decisions we take, we are correcting them by seeing this Excel sheet. Previously, I considered our morning 9:15 candle also. Previously, at the beginning of our almost 1.5 year back data, I considered morning 9:15 I considered. But see, for the last 1 year, we are not considering morning 9:15 candle. Because we realized morning 9:15 is not good. Because many gap up and gap down scenarios, at the time you get a huge stop loss. Your stop loss will be hit with a gap up. If your stop loss is hit with a gap up, how much loss you get? Beyond 2% loss you get. Because of all these reasons, we are avoiding morning 9:15. Previously, even we have captured, even 320 trade also we captured. Even I remember once, I took a trade at morning around 3 o'clock 15 minutes, I think. Almost 10 or 15 minutes before closing the trade, I took a trade, fine-tuned the entry, achieved 1:3 RR, and I have explained. Almost 1 year back video, if you look into HLQ zone analysis, you can look into the trade, how exactly I executed. I explained that. But today I am discouraging. The reason is morning after 3 o'clock trades are quite dangerous. Recently, for the last 2 months, we've been very strict on that. We are not considering any 3 o'clock trades. Maybe how HLQ zone performed, I am just showing you, but not capturing the results in the Excel sheet. Even one of our members also earlier, he took trade at 3 o'clock 15 minutes or 20 minutes. He took the trade. Within 10 minutes, he got a good profit. And he sent me the screenshot previously. But later on realized it is not advisable to show 3 o'clock trade. 3 o'clock trades we can take unless you are a highly experienced person. But most of you are beginners, and most of you are taking those things like you are feeling like they are adventurous and moving towards them, making mistakes and getting losses. That's why for the beginner's point of view, I am making all these changes. Ultimately, I have to explain the most safest way. So initial stage, it's not that how much adventurous you are and how much risk you are taking and how you are taking the trades. That is not important. Safety is important. How you are protecting your capital is important. So that's why we formed all these rules for the beginner's point of view. Once you get experience, you can do any kind of things. You can play even last 1 minute, 3:29 candle also you can play. Because you are already experienced. Even something wrong happens also, you will be in a position to handle the things. And you won't get disturbed. But beginners, if a trade is stopped out, I know how much disturbance they are getting. The next opportunity, if they don't get the disturbance, the next immediate opportunity you may get in another fine-tuned zone. Or maybe same stock, there could be second fine-tuned zone. That might give you profit. But if you're disturbed, you won't look into the trading platform. You run away from your computer. You feel sad. But once your experience grows, you control all those emotions. If you get a loss, if one of your trade is stopped out, you don't feel, okay, fine, it is part of the game. When I'm getting profit, I'm getting huge profits. Hardly I'm getting 6,000, 7,000 rupees profit on one future. But when I get the loss, maybe 1,000 rupees or 1,500 rupees I'm getting loss. That is okay, no problem. Compared to my profits, my losses are negligible. I will accept that small loss. Maybe next trade I recover the loss. This is how experienced people will think. But beginners, the moment the trade is stopped, you get disappointment. You don't feel like to focus on your trades. You don't feel like to explore the next trade opportunities. Sometimes you want to stay away from your computer. You don't bother what is really happening in the market. You don't even bother what other opportunities that are going to help you to recover your loss. You won't look into that. We just simply run away. As a beginner, even I did in the beginning stage. I am not exceptional. Nobody is exceptional here. Everybody has to face this problem. You need to handle this situation. One day, when such kind of multiple things happens, then slowly you will realize. That way your mindset also will be changed. And more disciplined way you will be trading. And don't bother about the losses at all. You will get into that situation. But everybody has to undergo this particular phase. You have to go through this phase. See, nobody will get perfection immediately. See, you learned the course, you have started doing. You won't get perfection immediately. Next 3 to 6 months are, again it is a training period. Training period for setting your psychology, trader psychology. This is the point everybody should understand. Why the risk management, we are very strict when you face any losses. It should not hurt your overall capital. Maybe some of money you will lose, but overall capital still, that will be helping you to recover your loss in the coming days. It will take 2 to 3 months time minimum to change your mindset or to change your psychology. First, always our mind wants, we don't want any losses. We want 100% profits. This is how your mind is expecting. Later on, what our mind says, okay, no problem. Even some losses I get also no problem. The overall profits should recover those losses. This is how your mind will get, some kind of maturity levels in our thinking will be changed. That way our mind will accept the reality. Okay. So this is the reason why I did not consider this trade. And these are the only opportunities we got, and other stocks we did not get any trade opportunities today. Look into the Canara Bank. This is a daily high liquidity demand zone. Rally, base, rally, and follow through candle. This is how our software identified. But see here, I didn't find I think only lower time frame zone is there. Why? Go to 15 minutes, 75 minutes, you get clarity. The 75-minute structure, I'm not really happy. See here, rally 1, 2, 3, 4, 5, 6. Or maybe you can draw 75 minutes. This is a failed ERC, 1, 2, 3, 4 base candles and rally you can draw. But 15-minute structure is not good. 15 minutes also drop, base, rally you might have drawn. Go to 5 minutes, you will get clarity. See here also you see. The risk management point of view, it is not a good thing. But actually from where it took the order flow? From here. Here you have a rally, base, rally. So it picked up the orders and again moved. And again it picked up the orders. Now drop, base, rally is created here. Of course this failed ERC candle can we consider as a base? It is a question mark. But it picked up the orders from here. So that is the reason why I thought this is the area to plan the trade and ignoring the the remaining things. Maybe here you see 5-minute zone is there, rally, base, rally. Maybe aggressive trade setup, any price action close. Next time it may give you trade. That is aggressive trade setups point of view. But unless you are an experienced person, I am telling you, avoid the aggressive trade setups, because in the past many people, beginners, made a lot of mistakes in going for aggressive trades. So that's why nowadays I am discouraging, especially for the last 6-7 months. I am not focusing on aggressive trades unless multiple price action clues are there. That day only I am focusing on aggressive trades. At least you should gain some experience. And remaining days I am not focusing on the aggressive trades. I am mainly focusing on fine-tuned zones and also lesson 22 concept. Lower time frame zone as an horizon to higher time frame zone. That because always that is the concept giving a very good success rate, more than 80%, or I can say more than 90% success rate. Those concepts are giving us such a powerful concept. Okay, we have a lower time frame zone. Anyway, today prices did not reach here. And next one is Titan. Titan already I explained yesterday, we discussed. Yesterday or day before yesterday. I have already explained this Titan. It is 2023 zone and the price did not reach today. And next one is PEL. PEL also we discussed yesterday. We have a 15 minutes zone. Sorry, this is a daily zone, not 75. This is a daily zone. Rally 2 base candle rally. And inside we have a 75-minute zone. This 75 is not having a proper 15-minute structure. That's why I told you yesterday prices entered, but I told you yesterday this will be violated soon. See, today it is pierced, this zone. But here we have a lower time frame zone, 5-minute zone. PEL is having a 5 minutes order flow, rally, base, rally. This is the one picked up the orders and moved. And this is the area we are planning our trade. But today when prices reached here, any dynamic zone is created, let us look into that. Now drop base rally is created, but almost this zone is going out of the zone. Only a small portion is here today. And if you draw 75 within this area, within the zone, any fine-tuned 5 minutes, you can plan trade next time. But not today. Next one is Conquer. This is a 75-minute zone, Conquer. We have a drop, 1, 2, 3, 4 base candles and rally candle. This is how our software identified. This one I fine-tuned with 15 minutes time frame. Here we have a 15-minute zone. I consider this as a failed ERC candle, maybe a rally. It's more dynamic viewpoint of I consider it as a rally. And 1, 2, 3 base candles and a rally candle. And another one drop base rally. We have two 15-minute zones. Go to the 5 minutes time frame. In the 5 minutes, have a drop, 1, 2, 3, 4, 5 base candles rally. If you feel the risk is high, because in this candle actually imbalance started from this candle, but clearly we are seeing on this candle. That way you can plan your trade like this. Drop base, this is a medium size part of the base and rally. Maybe it can be base candle also, don't know. Exactly you need to calculate, but it looks like maybe the body is more than 50%. So that's why you can, in case if you feel. Or if you have any fear that you will be missing the trade, plan like this. If the risk is beyond 2%, then again, plan your trade like this. It's all up to you. But here we have excellent zone is there. And also within this 15-minute zone, see, you have excellent drop base rally. You have rally base rally is there, and already tested, gave a good trade, and finally here it is violated. And this is a drop base, looks like a drop base rally, again LOTL zone, right? This is actually LOTL zone to draw wick to wick. Now you see, drop base rally. Because at wick to wick, new zones are getting created. If the risk is within your limit, plan your trade at the wick to wick. Type 1 proximal you plan. If the risk is within 2% level. If the risk is beyond 2%, no other option, you have to go to type 2. Because at type 1, drop base rally, new order flow is added, there are higher chances, again next time it will touch and it will move up. If you plan the type 2, there are higher chances you may miss the trade. But remember, at the end of the day, everything should be based on the risk management. Beyond our risk, you can't accept any trades. Even if you miss the trade, okay, but you can't accept the trades. Okay, this is about Conquer, and the last one is NCC. This is also a 75 minutes high liquidity zone. Our software identified as a drop, 3 base candles, and a rally candle with hidden body. This is the 75 minutes. Now it is in the pro gap area. In the pro gap area, prices are moving. Until all the order flows in the pro gap is consumed, prices won't enter into this zone. And pro gap area, you can't plan the trades because of risk management point of view. Okay, now let's go to the 15 minutes time frame. In the 15 minutes, I didn't draw here 7 candles. 1, 2, 3, 4, 5, 6, 7 candles are coming in the base. But here I identified a rally, failed ERC candle as a leg-in. You have 1, 2, 3, 4 base candles and a rally and follow through candles. For 15 minutes, this is also I considered as a base candle. 1, 2, 3, 4, 5 base candles. This is the leg-in, 5 base candles and a rally with pro gap. Add the gap here. If you add the hidden body, this is even much bigger. Anyway, imbalance is started, that is one thing. And even if you add the hidden body, this is definitely a big rally candle. Okay, within this area, again I have identified with 5 minutes order flow. Drop 1, 2, 3, 4, 5 base candles and a rally candle. From here it picked up the orders and again moved. Looks like drop base rally, right? No, this is also a medium sized drop candle. It is not a base candle. Maybe 3 minutes the structure you may see in a different way. But 5 minutes point of view, this is good enough. See, again this zone, see how powerful. It picked up the orders, moved up. And again it picked up the orders, moved up. Again picked up the orders, moved up. Now this entire leg out formation is completed. So that means this zone is also acting as a high liquidity zone, this 5 minute zone. And also this 5 minutes high liquidity zone is the origin for this entire 75 minute zone. So that's why our trade plan is in this area, in the origin. But today prices did not enter into the zone. So this is about our HLQ zone performance evaluation. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.